Good evening, everyone. How are you? Hope you all are doing well. Good. So, today, myself, Dr. Priyanka Kumari, Associate Professor of DPG Degree College, is going to explain you about the topic working capital management. I hope you must have aware about this topic, working capital management. Do you have any idea about working capital management? Don't worry, I am going to explain you step by step what do you mean by working capital management. So, what can you understand from this figure? Do you have, can anyone explain this figure? What is this figure is showing that? Here you can see that at one place the cash is coming inside the organization, cash which is known as cash inflow, and this cash inflow is comes in the form of the revenue from the sales. And in the another at the another space you can see that cash is going out, so cash outflow, so cash outflow in the form of production also. And so whatever the gap between the cash inflow and cash outflow, and so remaining cash, whatever the cash remains in your hand, this is known as cash in hand. So for explaining about the working capital and the working capital, we must have to be analyze the working capital as well as liquidity. So working capital, the money available to pay for day in day out activities. As you know that there are three types of capital requires for the business. One is called short term capital, and which is also known as working capital, and another one is mid-term capital, which is the duration for the more than 1 year to till 5 years, and above 5 years whatever the capital is required, which is known as the long-term capital. So each and every capital are playing the very very important and the crucial role for any of the business or any of the organization. If you have managed your long term capital nicely but you have not pay attention about your working capital, your business may not survive for smoothly and not be profitable for the longer period of the time. So for managing the business smoothly, you must have to manage your working capital as well as your long term capital. So another part of this working capital is also known as the management of liquidity. So what do you mean by liquidity? So liquidity means how much working capital a business has to pay its short term debts, right? So in any of the business there are two types of long term debt, and as per the financial analyst suggested that the long term debt should be utilized for the long term capital and short term debt should be utilized for fulfilling the requirement of short term debt. So liquidity means it is showing that how much working capital you have for paying of the short term debt. Now this is the theoretical meaning of the working capital. Here you can read out from the slide. Working capital means the firm's holding of the current and short term assets such as cash receivable, inventory, and marketable securities. And these items are also referred as circulating capital. Okay, why it is called circulating capital? Because it is there is operating cycle and the cash to cash. It means that once the cash, if you have a cash you will start spending that cash, and after there are different various level and steps processing, you will again receive the cash. So cash to cash we are saying that, so this is the circulatory capital, we can also say that. So corporate executives devote a considerable amount of attention to management of the working capital. If you will not manage your working capital problem, you may face the liquidity crisis in future. So at every places in every business organization, a working capital also play a very vital and important role as like your long term capital. So this is the working capital management. So what types of what types of answers given by no, what types of questions answers given by the working capital management? So working capital management answers the following questions. Number 1, what should be the level of current assets? As you know that every business has two types of asset. One is called fixed asset, another one is current assets. So working capital will give you the answer what should be your level of current asset. There should not be the excess of current asset, and there should not be the scarce of current assets. Excess is also harmful for the business, and you have a scarce of cash, it is also harmful for your business. You cannot run your business smoothly. There must be the interruption in your business. So there is a smooth level, or there is a certain level of the current assets you must have to manage for your business. Another questions answers we can receive while managing the working capital management or studying the working capital management. This is what should be the level of current liabilities. There should not be the excess of current liability in the business also. If you are having the very much current liabilities, the liability which you have to pay within 1 year, right? So which is known as the current liability, then you will be always in burden to paying for the liabilities, and you cannot work smoothly. So now working capital will give you the idea or instruction what will be the ideal level of the current assets and what will be the ideal level of current liability as well. And the last point, what the answer we can receive while studying for working capital management is what should be the total investment in working capital of the firm. If you have a put much more in a, amount for your working capital, it is not also advisable, because we'll explain you in later part. Because there is an opportunity cost also. If you have a manage suppose you are keeping cash in home or cash at home, so what is the worth of that cash? If it is not flowing from one place to another place, cash will not give you the appreciation value. So similar like that, working capital should manage as per the requirement of the business. It should not be the excess of the business, and it should not be the scarce for the business, right? So there must be the certain level of the business, and this level you will decide while studying for the working capital management. Okay, I hope you are getting my point and everything is clear till that. Okay, so moving ahead, we are going to discuss, I'm going to discuss about the objectives of working capital management. Here you can see that every work must have some certain objective. So why we are putting attention for working capital management? So number one objective is to maximize the profit of the firm. As you know that what is the primary objective of the financial management. There are certain objective, various objective of the financial management, but these two objective, one is called profit maximization, and another one is called wealth maximization. Every firm has these two basic objective, wealth maximization as well as profit maximization. So working capital objective is also related to maximization of profit maximization. Okay, number two, to maintain the sufficient current asset. Why sufficient current assets? To meet the requirement of the current liability, to meet the requirement of day in day out activities, capital for the day in day out activities. And the third objective of the working capital management, to help in timely payment of bills. Okay, so you can pay your creditors, you can pay your debt on time, right? And the fourth objective of the working capital management is to maintain the adequate liquidity of the firm. Liquidity management is a very important aspect. If you have a fixed asset, if you have a land building, but you don't have a cash in hand for operating your business day in day out, your business cannot be survive. So liquidity is also an important aspect, but there should not be the excess of liquidity in your business also, to minimize the business risk of the firm. If you are if you are your liquidity position is strong, then you can minimize the risk of the business. In if any contingencies around the firm or around the business, you can minimize that because you have a good management of your liquidity. So ideal for the liquidity of any of the organization, it should be in the form of 1:1. Okay, moving ahead. Here in this slide you can see that we have mentioned that what will be the impact of the working capital on the business, and how can you manage your, at what level you can manage your working capital management. So under the working capital management and their impact on the performance, you can understand that collection period, management of collection period, management of credit period, management of current ratio, management of cash conversion cycle, and management of stock turnover ratio. In the upcoming video, we will discuss about each aspects in details, right? So here I have summarized that point of the management of working capital on the basis of these five aspects. Okay, so moving ahead, now we are going to explain what are the different types of working capital. So that it depend upon the basis of the requirement, basis of the time, basis of the concept. So basically, the working capital requirement on the basis of time has been categorized into the two part. One is called permanent or fixed working capital, another one is temporary and variable working capital. What do you mean by permanent working capital? We'll explain it in the next slide. And on the basis of the concept, there is a concept of gross working capital and the net working capital. So this is here you can see that gross working capital. It means that gross working capital means total of the current asset, valuation of the current assets, and net working capital means excess of current assets over the current liability, means current assets minus current liability. Suppose for example it is given that if your current assets is 50,000 and your current liability is 30,000, then what will be your net working capital? So it is the current assets minus current liability, which will be 20,000. Current working capital may be positive, working capital may be negative, working capital may be zero also. If your current assets is greater than your current liability, then your net working capital will be positive. If your current asset is less than current liability, your formula will not change. The only the valuation depends upon the valuation, the positive working capital and the negative working capital. And if your current assets is equal to your current liability, it will be your zero working capital. And now, as we have already discussed in the last slide, another on the type of basis of need of the working capital, it is called the permanent working capital and for the temporary working capital. So, for any business, two kinds of working capital may be required. For which type of business the permanent working capital will require? This refers to the minimum amount of investment in current asset which is required at all times to carry out the minimum level of business operation. Amount required to maintain current assets on its minimum level. Like that, suppose for example here you can say, I can say that like the company of Amul, which is producing the dairy products. So dairy products requirement cannot vary on the basis of the season, on the basis of the on the basis of the temperature and all, right? So it will be continuous and smooth requirement. So for the company like Amul, the requirement of the working capital will be permanent in the nature. And for example, in the another head we are I am going to explain you about the temporary working capital. So temporary working capital, the firm is required on fluctuation basis, depending upon the sales volume, depending upon the production, depending upon the volume of the sales in certain period or certain cycle. Like that, seasonal products manufacturing companies, if like suppose in the winter season the production of the winter clothes are higher, so the company is required more working capital on that time. And in the rainy season the production of umbrella is higher, so company of making the umbrella is required more working capital, but it will not consistent for the entire year with the same amount of working capital requirement. So I hope that you will you must have clear about all the types of the working capital. For today's part, I am going to stop here. Thank you so much, and will you can continue watching my video on your my YouTube channel, Priyanka Ma'am, at the rate Finance Guru. Thank you all.